Hey guys, welcome to another episode of the Texas Blockcast. We are here with Fred Thiel, the CEO of Marathon. Marathon being one of the largest Bitcoin miners in the world, a publicly traded company. Fred, I know people know Marathon, they know you, but before we dive into what you guys are doing, let's, if you don't mind, give the audience a little bit of a sense of your background and what you did in industry moving to where you are today.
Sure. So first, pleasure to be here. I've been in the tech industry for 40 years. I started writing software for banks in London when I was 17. So, go back a lot of years. So late 70s. Punch cards, IBM 360 machine, mainframe. Back in those days, you had to kind of include job control language in your instruction set. So the operator knew what disk pack to put on which reader, and you had to advance the head on the disk pack to the right sector, and old-fashioned computing.
Wow.
And have pretty much been in every sector, semiconductors, data comms, networking, digital ad tech, digital media, enterprise software, SaaS transition, storage, PC peripherals, kind of you name it. And also went to the dark side, spent some time, ran a private equity fund focused on enterprise software companies, and co-founded a venture fund, and have advised a lot of very large technology investors in their M&A strategies over the years. But I got involved with crypto back in the mid-teens, and saw the kind of this problem of these islands of trading that were going on between Japan, South Korea, Europe, US, and the inability to move money across exchanges and to exchanges. And so the people who were trying to do the arbitrage trade, which was kind of the Alameda trade, if you would, their issue was moving money between accounts. And so wrote a white paper to basically build a common order book that would aggregate the order books of all these exchanges. You'd have an account on one system. The system would allow you to trade across all the exchanges. You'd only be moving money in and out of one place. Went to the US regulators, who kind of laughed. This is late 2015, early 2016. They kind of laughed and said, we don't even have rules for how we would consider this. Plus you'd need money transmitter licenses, et cetera, in 50 states. So went to Switzerland, spoke to the FINMA, which is the Swiss Monetary Authority. And they said, in Zug, we have this crypto valley. You could do something in the sandbox, but eventually you'll have to get a banking license, and we don't give US companies Swiss banking licenses. And so, thank you very much, but no thank you. And then went to Liechtenstein next door, and the Liechtensteinian authority said, gosh, we don't have exchanges in our country. We don't have any rules regarding crypto. What would you suggest? And we went to a law firm, and they said, well, why don't you just try and get the permit to trade crypto in Liechtenstein? Liechtenstein is an EU country, so that would give you the right to do it across the EU. So the law firm approached the government, and the government said, sure, we'll write a law that lets you trade Bitcoin and Ether as if it was a currency. It's not making it a currency, but just the regulatory framework would be foreign exchange rules.
Sure.
So we started a trading operation to do that. And after becoming, getting that up and running, they came to us and said, gosh, you really need to have a banking license. And so, but by that point, I was totally bitten by the Bitcoin bug and had gone way down the rabbit hole, and, had good understanding for the economics and the benefits that Bitcoin really bring to economies and to the underbanked, and how you could use it for international settlement. And being a technologist, I was focused on both the technology of Bitcoin and the store of value of Bitcoin. And at about the same time as all this was happening, a good friend of mine, Mariko Komodo, who was my predecessor here at Marathon, he had been asked to become CEO of what was then Marathon Patent Group, which was a patent troll. Interestingly, their claim to fame was that they had one of the patents that essentially underlies the ability to use voice control on a mobile device to tell it to do stuff. So think of Siri, think of Alexa. They had sued Apple and successfully gotten Apple to pay a licensing fee. They had
Wow.
sued Amazon and spent all of the Apple licensing money suing Amazon and had not gotten a good outcome. And that's hasn't been settled yet, and it's still years later now. So Merrick had been asked to by a group who had kind of taken control of Marathon Patent Group to put Marathon into the Bitcoin mining space. And he had never done Bitcoin mining. And so he studied it for a while, and then he reached out to me and he said, "Hey, Fred, listen, I need somebody on my board who understands crypto, understands how to scale technology companies. Would you join the board?" So I joined the board of Marathon in 2018. And we spent a lot of time cleaning up the balance sheet, getting things organized so that we could really scale the business. And then, the fate, opportunity, and preparedness all happened to cross at the same time. And we were able to raise a lot of money in 2020, and then 2021 bought a lot of miners. And here we are, one of the biggest publicly traded miners in the world today, with a lot of miners running in Texas. And thank you for having such a wonderful state. And then we also operate in North Dakota and UAE. So that's kind of the long and the short of it.
That's awesome. And a lot of new info for me too. I wasn't aware of some of those things in your background. So very cool, and cool for the listeners to be able to hear that. Let's dive into the mining piece a little bit here. So Marathon has a different model than most. There are efficiencies that you guys are pulling from your different model that give you a competitive advantage. Perhaps if you are able to share some of those efficiencies, and how are you pulling those efficiencies out? What are you doing differently from some of the other, some of your competitors that really gives you some of that competitive advantage?
Sure. So we think of ourselves as capital allocators, and maybe I'm a little jaded, having spent time in the private equity world and the venture world and having scaled a lot of technology companies. It's really about, you have to time the way you deploy capital to the conditions in the market, right? And if you think back to 2020, 2021, it was all about number go up. The price of Bitcoin was going through the roof, and it was all about scaling. And if you think about traditional Bitcoin mining operations, you secure a site, you have to negotiate a power agreement, you have to order transformers, you have to build this infrastructure, and then you get miners, and then you plug those miners in, and then you start mining. 18 to 24 month process. We knew that winter was going to come, because those are the cycles Bitcoin goes through every 4 years. And we knew we needed to get scale quickly so that we were able to generate a lot of revenues and profits, so that when winter came, we'd have a war chest to be able to take advantage of the opportunities that arose during the winter. So what's the fastest way to scale? Well, if you think about, if you can short circuit the timeline so you can just plug miners into existing sites, you need to find people who have sites under development. Ideally, they're spending all their money to develop the sites, so you spend all of your money just on miners. So our asset light model was really designed around deploy 100% of your capital on miners instead of 30 to 40% on infrastructure and 60 to 70% on miners. So that's how you scale faster.
What about the technology piece? You have a technology background. Marathon leans into the technology a little bit more than some, whereas others may lean into infrastructure or power trading. You guys are leaning into, you've developed your own pool, your own mining pool. You've leaned into technology in other ways, including with some strategic investments. Can you talk about the importance of the technology?
Sure. So if you think about the world of computers, you've got the Microsoft world, kind of the PC world, where you have Intel makes microprocessors, different systems integrators build the PCs, Microsoft is the operating system predominantly, then you have applications from third-party vendors, and then you have all these cloud services. Now look at the Apple ecosystem. Apple makes the chips, Apple makes the computers, Apple makes the operating system, Apple makes the cloud service, Apple makes some of the applications. Why does Apple do that instead of doing the traditional model? Well, because of the high level of integration between all of their services, they can make the user experience not only better, more magical, if you would, but they can do things that you can't do when you're constantly relying on third parties to do things. So if you think about the Bitcoin mining industry, you have third-party pools who are designed to operate with all of the miners that are out there, old machines like S9s and S17s, connecting from sites with horrible network connectivity. So they have to build all this infrastructure so it works with the lowest common denominator. And then they have the issue of these miners are coming online, going offline, coming online, coming offline, depending on curtailment and stuff like that. So there are a lot of operational complexities to running a third-party pool. Now look at the individual miner. Bitmain, MicroBT, Canaan, everybody, they ship miners so they can be plugged in standalone, which means they have a lot of software on them. If you're running 100, 200,000 miners, you want to have as little software running on them as possible. So the only thing they're doing is hashing, and you want to let the rest of it be directed by an orchestration layer or the pool. And so we designed the pool because we knew there were inefficiencies in third-party pools because we had benchmarked them against each other. We designed our own firmware so that we could not only strip out the inefficiencies in the miner, which, by the way, means you get a little bit more energy applied to mining than the mechanical load, if you would. But more importantly, we added in our firmware the capability, which you don't have in the stock firmware, to underclock, overclock, and do all sorts of nice things with the miners.
Right.
And so when you then integrate that with the pool, where you strip out the inefficiencies and having to deal with lowest common denominator, we only operate two types of machines. It's really simple. We use the exact same, generally speaking, standard network connectivity to connect them so we don't have issues with latencies, et cetera. You get, 1, 2, 3% more efficiency. Well, in the long run, that adds up to a lot of Bitcoin, especially when you're doing it at scale.
Yeah.
And, people can look at our production numbers because we operate our own pool so people can see. And there are times where we just generate a lot more Bitcoin than we should for our size. And part of that is due to when our technology fires on target the way it should, things work.
There might be some luck there. Yeah.
Yeah. Luck factors into it. But, luck is this notion that, over a period of time should normalize, right?
Yeah, exactly.
But in reality, if you think about what we do and think about how the nonces work, if you tell your miners to start guessing in the right place and they guess the nonce faster than anybody else, you win the block. The science is all in knowing where to start guessing. And if you apply some interesting logic to that, you can potentially get a little tiny fractional advantage. And every now and again, that fractional advantage, and this is just like quant traders on Wall Street. Maybe this is because our CTO is a former high frequency trader. But you start plugging a little of these capabilities into things, and every now and again, something pans out that works really nicely. On top of that, you layer in what we're doing in immersion technology, and now you start getting operating efficiencies. So, for example, in the UAE, when we lit up our pilot there last year, it ran for 100 days without an engineer having to go on site and touch a miner. This is in the most hostile mining environment. It makes Texas look like a temperate climate. You're talking 115 degrees, 120 degrees ambient temperature, 95% humidity, with a lot of dust, et cetera. Granted, this is all immersion. We do it in containers, not in buildings, and these things just run.
Wow.
And so we're very focused today on leveraging our technology. And by the way, if people want to buy or license our technology, we're happy to sell it to them. But we really look at technology as a way to reap huge operating efficiencies out of what we do, so that we're not like everybody else. We can do things that other people can't. We also look at the fact that we made the investment in Auradine, which is a US ASIC manufacturer. Why did we do that? We don't want to be the biggest Bitcoin mining hardware company in the world, not at all. That's why we have a very small position in that company. But what we did want to do is drive the technology spec of those machines. Mm-hmm. So those machines are designed on the lowest possible total cost of ownership. Mm-hmm. Some of the amazing features built in these machines, is the ability to, using their cloud-based software, it automatically looks at the price of Bitcoin, the cost of your energy in the moment, and the global hash rate, and it optimizes every ASIC in the miner and every ASIC in the fleet of miners you're operating to the maximum profitable setting.
Wow.
And that includes things like what's the temperature of that ASIC at the moment, what's its hash rate, et cetera. So doing things like that, you don't have to have the most energy efficient miner then, because you have the most economically efficient miner running. Plus the fact that they're made in the USA, we think is important, because God knows if we ever get into a trade war, full-on trade war with China, and the customs department decides to get really finicky about stuff, it may be hard to import miners from offshore. So we think that's really important. And then we've designed immersion technology to be very hands-off, because we think if you can not need a lot of people to run your Bitcoin mining operations, you can run much smaller mining operations in places where these machines have to run in standalone sites. So if you think about the world of flare gas, these are 1 megawatt, 2 megawatt sites. These aren't 100 megawatt sites. Well, be very expensive to do air-cooled miners in these small sites. But if they're immersion cooled, self-contained, and you only need to go once a month to have a look at them, you can run a big oil field full of miners spread across, generating Bitcoin. So we think that the technology is going to give us an edge in being able to be more agile in the opportunities we look at, no matter where it is in the world where we're looking at it. And then lastly, we also look at how we can leverage our technology on the power generation side, because we think that while up until prior to our Abu Dhabi site, we didn't own and operate sites. We had the Hardin site in Montana, which we built, and that's where we kind of learned the lesson of being asset light and why we did it at the time. But today, we're of a size and scale where it makes sense for us to own all the way down to actually owning power generation. And so we're very focused now on doing everything from power all the way up through the pool, and all the technology components that fit there, because we think we can continue to eke out efficiencies all the way down. And whether that's generating lower cost electricity or just generating more Bitcoin with the same number of electrons, it all goes to the benefit of our shareholders and to the grid. So.
Well, you mentioned flare gas there, which is not something we talk about much with our large corporate mining members that are on grid. And it is interesting, though, because we just had a continuing education event with the AAPL, the American Association of Professional Landmen. They're based here in Texas, and they're a national organization. But we did a continuing education event where landmen came in person. There was lots tuning in online, and we did a panel and basically educated them about what Bitcoin was, what Bitcoin mining was, and then talked about the synergies between Bitcoin, or really stranded energy, and Bitcoin mining. And so what you're talking about is really just finding stranded energy and monetizing it. So that's what you can do in the Middle East. That's what you can do in Texas. You can do it on grid. You can do it off grid. It's a little bit easier to conceptualize off grid because people can see you're making $0 for flared gas or stranded gas, and then you monetize it with an on-site buyer of electricity. With on-grid, you do it as well, but then you have to play time of day, location, ancillary services. Behind grid when you have transmission congestion, you're kind of on the opposite side of the congestion. There's ways to do that, but it's a little more complex. Do you see further? Because right now we estimate that about 97% of Bitcoin mining in Texas is on grid. We only have about 3% of our aggregate, almost 2,300 megawatts of Bitcoin mining in Texas being off grid. Do you see that growing in the future? Maybe 95%, 94% being on grid, but then maybe doubling the amount of off grid mining?
Yeah, I see it's the only way that Bitcoin mining can survive long term. For example, in our King Mountain site, we sit behind the meter at a wind farm. So we're taking wind energy as long as the wind blows, then we have to take grid energy when the wind doesn't blow. Right. We think that if you can power Bitcoin miners using renewable energy sources People argue, well, methane's not renewable. Well, here's the thing. Methane gas is 80 times more damaging to the environment than carbon dioxide. And if you can convert that to carbon dioxide by turning it into electricity, you're actually helping the planet, because methane is 20% of our problem on this planet. And so we think it's a very important thing to convert as much methane to electricity as possible. Plus, it's stranded. So the other thing is that the political environment, which you are very well aware of, is at times and in different places antagonistic towards Bitcoin miners because of the misapprehension and misunderstanding about Bitcoin miners and how they use energy, and are they actually adding to the load, or are they supporting load shedding and keeping actually the prices for consumers and the quality of life for consumers better. I argue that we do help the grid and we do help consumers considerably, especially when it comes to avoiding blackouts. But you just don't know where that's going to go. And electricity demand is only going to increase, and the amount of development that needs to be done to meet that, with all the EVs, the electrification, and the lack of proper transmission technology and availability. As I look out 5-10 years into the future, it tells me I need to generate my own electricity to be a Bitcoin miner, because otherwise there are too many exogenous factors that will negatively impact me in my life.
Yeah.
And so is there a way for us to do that, help the environment, help communities, and do it in a way that makes economic sense to our shareholders? Then absolutely, that's what we're going to focus on. So we're very focused on looking at, how can we take true stranded energy and leverage it for Bitcoin mining, such that, and yes, if there are opportunities to provide energy to the grid, happy to do so. But, really looking at it from a perspective of, how can we as a Bitcoin miner operate in a way so we're not impacting anybody's lives in any way negatively, and only doing it positively.
Well said. There's a business model that you may be aware of, and some of our listeners probably are not yet aware of because it's quite new, that really takes all three of those factors and arbitrages. It allows you to simultaneously arbitrage them. So they're an off-grid miner connected to the pipeline, connected to the grid, and they're able to either sell. So they have a gas asset, a gas asset. So they're able to sell into the pipeline. If the Henry Hub price is more than $3 an MCF, then they'll sell into the pipeline. Or really, it'd need to be more than like $5 an MCF, because they make about $5 an MCF on their gas when they're mining Bitcoin.
Right.
But they're also plugged into the grid so that they can sell power from their genset to the grid. Now, you would only do that in rare moments, but this summer in Texas, if you had been doing that, there were so many days where we hit that max cap of $5,000 a megawatt hour, $5,000 a megawatt hour, that it would have been wildly profitable to sell into the grid for about 2 hours or maybe even 30 minutes. Because those are 5-minute pricing intervals, as you know. So what do you think about that model? I mean, it just creates so many more dynamic factors at play, maybe too complex.
No, so I'll throw the fourth dimension in there.
Okay.
Now add some battery capacity to that.
There you go.
And now you basically have this capacitor, the batteries, that can play the energy arbitrage game, because to your point, typically those pricing spikes are temporary in nature. It's 2 hours, 3 hours. And the time it typically takes a Bitcoin miner, and again, this is where technology is important, but it typically takes a Bitcoin miner to ramp down and ramp back up. It's a couple of hours round trip typically, unless you've got unique technology that lets you do it faster. So miners are constantly doing this, where's the strike price, and do I shut down, do I not shut down? Well, if you have battery capacity, you can say, I can just play arbitrage with the battery all day long.
Yeah.
And I leave my miners running. If it's longer, I'll shut down the miners and feed all the grid needs. But that's definitely an opportunity. I think that's very interesting. But again, that starts playing to Bitcoin miners of scale can do that. Right. It's a lot harder for the smaller guys.
Right. Yeah, I think there will be, the more we get in touch with these large energy companies, the more their ears are perking up on this, because a lot of times they have no option but to sell into the pipeline, and the midstream people are just gouging them, not providing good contracts. And gas, oil is doing great right now, but gas is doing
Yeah.
terribly. So,
Yep.
you're not over 250 an MCF, $2.50 an MCF right now. So, there's really not a lot of options. So, but there's a ton of money and a ton of investment, as you know, in energy infrastructure across the country, and in Texas in particular. So we're starting to get an audience with a larger, demographic of energy professionals that are saying, hold up, wait, you add Bitcoin mining to this, there's now the battery thing I
Hmm.
hadn't even thought of. I'm aware of some people that are doing the three-way arbitrage, but adding a fourth dimension in there is even more efficient, I think is the right word.
Yeah, exactly. And you got to realize though, now you're moving the needle from being a Bitcoin miner doing energy stuff to being an energy company doing Bitcoin mining.
Which
So I
honestly
think
is where
that's
we
the
need to
natural
go.
migration. Yeah,
We need,
exactly. I think that's the natural migration.
I agree. And from a political perspective, it helps us too, because then
Hmm.
you won't see bills targeting Bitcoin miners, because there will be no such thing. You'll have energy companies that use Bitcoin mining. And you'll have energy companies that do a little bit of data center stuff. But as I've heard you say before, we have to be careful with the AI LLMs, because they are not a flexible load. Those AI models
Correct.
are a constant on with 5 nines of redundancy, and that's a different game when it comes to grids. One question for you. I know we probably have to let you go after this. One question for you about the monetization of hash rate. What are your thoughts on the coming influx of products that are approved by the CFTC around hedging, hash rate, non-deliverable forwards? How do we expect to see? Is that going to evolve in a similar way that energy has evolved, do you think?
I think there's a lot of promise. We've certainly spent a fair amount of time looking at it. If you're in the oil and gas industry, or if you're in, a farmer, these types of instruments are how you finance your business, right? Russia's whole oil industry is financed using futures. So yes, it's a good tool. The issue, I think, is you look at the overall global Bitcoin mining industry, and how do you get enough volume and liquidity so it actually makes sense? That's the problem. These things take time. It takes time for these derivative markets to develop. And I think once they do, it will be very attractive, especially for smaller scale miners to do it. And bigger scale miners will allocate a portion of their production capacity to it. We've certainly contributed capacity to some of these structured instruments where, as an experiment, we'll give you, a few petahash here, a few petahash there, and just see how it works. But we think there's not enough liquidity in the market to do it at scale. And you need institutional buyers who are interested in doing the arbitrage, because if you think about it, I'm going to essentially buy somebody's hash rate, and I'll receive the Bitcoin that produces, and the arbitrage I'm doing on is that the price of Bitcoin is, or the luck that miner has in that period of time, is higher, such that I'm actually getting a good return on my capital. And when Bitcoin price is in a downward trajectory, or it's just chopping sideways, it's less attractive for these instruments. And you can look at what the clearing price of these things is, and kind of see how those are doing.
Yeah. Yeah, I think one day, hopefully, there will be some added incentives from capital allocators who require certain, hash price hedges to then issue debt. Do you think that could potentially be on the radar?
I think the debt providers today don't want to underwrite the risk.
Yeah.
Again, if there's a liquid enough market, it's a different story.
You can pass on
Right?
the risk to a speculator, kind of a capital.
Yeah.
Yeah.
Yeah, it's like the options market, right? If a stock has to have enough liquidity so that you can underwrite the option, use options, or effectively as a way to short the stock, or as a way to reduce your risk. It's like when we issue a convertible bond, those bondholders typically will go out and short the stock right away as a way to cover their risk. It's the same thing with a lot of debt instruments. Lenders will typically do that. You have to have enough liquidity to do that,
and we're just not there
in a
yet,
marketplace. Yeah. We're not there yet, but we may very well be in 3 or 4 years. Who knows? We'll see.
Right. Well, Fred, first of all, I wanted to thank you and Marathon for supporting the North American Blockchain Summit. We look forward to having you there. That's here coming up in about 2 months. Within the next, say, 2 to 6 months, we've got the halving, we've got some major events. What are you most excited about for Marathon in that period?
I just think it's looking at all of the various growth opportunities we're looking at. We spent up until kind of the middle of this year just nose to the grindstone, focused on hitting our 23 exahash goal. And now it's really focusing on, okay, now let's look at all the other stuff we put on hold, and let's kind of cherry pick what we think we're going to go after. And there are a lot of opportunities on the table, and we've got a great balance sheet. If
Some
we're in
M&A,
this
some
situation,
M&A activity, perhaps?
yeah, possibly. If we'll see it. I think if Bitcoin is at these levels when we go into the halving, it's going to be a very M&A rich opportunity. There are going to be a lot of miners that are going to have some challenging situations, and we've been stockpiling Bitcoin and cash ahead of that, so that we're ready to go if anybody needs us. So,
well, it's exciting times, to be sure. I know people will know where to find you guys on the stock market. Mara is your ticker. Where can they find you on Twitter or on the internet?
You can find me on Twitter, or X as it's called these days. I still have a hard time remembering to say that.
As do I.
At FGTHIEL is where you can find me, or just fred@mara.com.
Awesome. Thank you, sir. Thanks for coming on the show.
Thank you very much. Appreciate it.
Hey, it's Amy. Click over here to subscribe, click over here for more content, and we'll see you next time.